Hey everyone, welcome to another dividend stock investing video. I want to share with you all in the video today a dirt cheap dividend stock because our stock market right now is so expensive. So many investors out there, dividend investors, tech stock investors, all sorts of investors are having a difficult time finding value. Well, I want to review in the video today one of the stocks that I own in my personal dividend stock portfolio, and that is Pfizer. In my humble opinion, Pfizer is a solid value stock right now. And in fact, I believe the pharmaceutical space, the big pharma space overall is on sale right now. And so I'm going to compare Pfizer to another company in the video today, AbbVie. I'm going to look at that one as well. And by the end of the video, I'm actually going to have some really interesting conclusions because in many ways, I went into this video really focused on Pfizer. But as I go through the numbers, it looks to me like AbbVie is equally dirt cheap as well. And so there are some solid values out there for dividend stock investors. Before I get started today, I kindly ask you all to smash that like button. If you really enjoy the videos on my channel here, it means the world to me. It helps support my channel here on YouTube. And don't forget to hit the subscribe button as well with the notification bell, because I have so much more content on the way. It's really late. It's Friday night, but this is how I do it. I am here for the community. I love you all. Let's get started with another dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone, before I get into the analysis today, a quick heads up. Check out the pinned comment below. I have a link to the Dividend Talk podcast. Earlier this week, I had the opportunity to be an interviewee on the Dividend Talk podcast, and this is a really cool podcast. It is hosted by European dividend growth investor and also Engineer My Freedom. These are two dividend stock investors from Europe who have this awesome podcast, and we sat down earlier this week. I had a 2-hour interview on their podcast. We had a fun time talking about all sorts of stuff. And so part 1 of the 2-hour podcast has been released. Part 2 is coming soon. If you check out the pinned comment below, I link to it so that you can check that out. And I want to sincerely thank again my friends, European dividend stock investor, European dividend investor, and Engineer My Freedom, my two friends. And so with all of that, let's start. Check it out on the screen right now. This is my Pfizer dividend stock analysis, and I have a lot of ground to cover. So Pfizer is trading right now at $36.60, and with the 2021 EPS estimate at $3.33, that puts the PE this year at a 10.99, a very low PE. Now, keep in mind that next year in 2022, the EPS drops a bit down to 304, and that places the forward PE for next year, 2022, at a 1204. Why is it that this is happening? As I go through some of the slides today, as I go through some of the investor presentation from Pfizer, you're all going to see that the impact from their vaccine for the pandemic, their impact from that vaccine, it is huge, and it's adding a lot of revenue, a lot of earnings to the company. But a lot of those vaccines, they're going to be consumed this year in 2021. So I believe that's why analysts forecast that next year earnings are going to dip. Nonetheless, it's trading at a forward PE in that range of 10 to 12. That puts this stock, in my opinion, in bargain basement territory, and you'll see why as I go through the presentation today. Check it out on the screen right now. I want to do a quick comparison. I have actually even before the comparison, I have here in my spreadsheet without the vaccine as well. And so without the vaccine, the EPS estimate for this year comes in around $2.55. I'm using the mid-range of guidance provided by the company. And so if there were no vaccine, if they had no vaccine, the PE on this company is trading around a 14. And so that gives you a sense of with vaccine, without vaccine. Now, in terms of a comparable, AbbVie, which I also show here, which is another stock I own, is trading at $107.54. Based on their guidance and the analyst expectations for this year and next year, their PE is at an 8.65 this year, 7.79 next year. So obviously AbbVie is trading cheaper. It's trading even more dirt cheap than Pfizer. Now, there are reasons for this. One of them is the dependence on Humira. The other one is the massive amount of debt at AbbVie. So I think analysts and traders are pricing that in to these stocks, and that's why AbbVie is trading at a lower PE than Pfizer. But I think both of these are in bargain basement territory. And I also include Viatris in there. Viatris is trading at a PE of 3.83. And so Viatris, by the way, is the spin-off from Pfizer. What happened is Pfizer spun off its Upjohn business unit, which was its generics, its biosimilars. It formed a new company called Viatris when it did a reverse Morris Trust merger with Mylan. I'll include in the description below a link because my very last video was on Viatris, which is another stock I'm buying now. In fact, I like all three of these stocks right now: Pfizer, AbbVie, Viatris. And so if you ask me, Ian, where do you see the value in the market right now? I'm known as PPC Ian, but a lot of people out there call me CPG Ian because I love consumer packaged goods. Right now, there's some value in consumer packaged goods, but I'm seeing a ton of value right now in big pharma, and that's where I'm looking right now. Let's keep going. Check it out on the screen right now. And so next, I just want to look at the dividends. The dividends for Pfizer are 39 cents per quarter. That comes out to $1.56 a year, or a dividend yield of 4.3%. Payout ratio 46.8%. Solid. AbbVie, by comparison, is at 4.8%, or a 41.8% payout ratio. Solid. Both of them are in a similar range. AbbVie slightly better because the starting yield is a little higher. Now, what you'll see also is I do a 5-year compound annual growth rate on the dividends. Over the last 5 years, on average, Pfizer has increased the dividend by 5.4% per year on average. Solid. AbbVie, unbelievable. It's at 17.9%. Now, is the AbbVie compound annual growth rate going to continue? We'll see, but it's certainly, even if it were lower, even if it were down at 7%, for example, that would be really amazing. And so AbbVie, in many respects, it is winning here. But as we go through the analysis today, especially as I go into the balance sheets and I look at some of the fundamentals, there's a reason that AbbVie is priced better. There is a reason for that Pfizer has a higher PE, and it is because of quality. And I would say Pfizer tends to skew more towards quality, more towards a risk-averse investor, whereas AbbVie, there's a little more risk with it. Now, AbbVie, I don't include a 10-year compound annual growth rate on the dividend because AbbVie, I don't have historical data for 10 years. I think 10 years ago, it was still combined with Abbott Labs. And so it was, you don't really have a comparable there. But Pfizer, over the 10-year period, has grown the dividend on average by 6.9%. And this is really, really important for me as a dividend growth investor. And in that recent podcast, honestly, that I did on Dividend Talk that I linked to in the pinned comment below, one of the questions we were discussing on that interview was just what kind of dividend growth rates I really like. And my sweet spot is right around 7. And so it's nice to see over the 10-year period that Pfizer has grown its dividend on average per year by 7%. As long as we're on the topics of dividends, one of the things I really like about Pfizer is they just increased the dividend recently. So check it out on the screen right now. This is especially important because, as I have discussed in my last video, they recently spun off Viatris. And so even though they spun off Viatris, and by the way, Viatris will be paying a dividend soon, as I covered in my last video, so I'm really excited about that. that did not slow down Pfizer. I actually thought Pfizer might slow down their dividend growth. I thought they might say, hey, we're going to slow it down a bit. We don't need to grow it because you're getting dividends from Viatris as well. No, they didn't go that route. Actually, they increased the dividends. So you can see here for the payable date of March 5th, the dividend amount was 39 cents. But for the payable date of December 1st last year, the dividend amount was 38 cents. So Pfizer, even though they spun off a good chunk of their business into the entity called Viatris, they're still going ahead and increasing the dividend on top of that. And so shareholders like myself now benefit from the Pfizer dividend and from the forthcoming Viatris dividend. So I'm really excited about that. And you can learn more about Viatris in my last video, again, which I linked to in the description below. By the way, I'm going through this Excel analysis here. I just want to let everyone know I also have a Patreon. I will link to that in the pinned comment below. It's a really cool community. We have over 150 dividend investors there so far. And folks here watching this channel on YouTube have gone over to Patreon and signed up. And when you sign up for Patreon at the for everyone on Patreon, there are 26 and counting bonus videos. And so that's really awesome. If you want even more content, bonus content, only available on Patreon, check that out. And then at the, that's for everyone on Patreon. I actually have two tiers. At the higher tier, the Thug Life Investor tier, I also am going to be sharing all of these Excel analyses like the one in the video today. Now, a lot of my Excel analysis I just share out there, for everyone to see, but sometimes it doesn't make as much sense. So what I'm literally saying is any like supporting materials, Excel analysis that I prepare for videos, the Thug Life investors over on Patreon will always get those. And so just another reason to consider signing up for my Patreon, which is awesome. The support means the world to me. Let's keep going. Check it out on the screen right now. And so I want to look at market cap really quickly. Market cap of Pfizer is $200 billion. And that's after spinning off Viatris. For AbbVie, it's $189 billion, and Viatris much smaller, so $16 billion. Now, something else you can see on the screen right now is just a quick look at long-term debt. This is really where you're going to start seeing why is it? Why is it that Pfizer's trading a little more premium valuation than AbbVie? And what it really comes down to is this. They are only carrying, I should put that in quotations, but they're only carrying $37 billion in long-term debt. Whereas AbbVie, because of the Allergan acquisition merger, they are carrying $82 billion. Now, don't get me wrong, Allergan was needed to diversify the company with Humira coming off of patent protection. They're going to need that diversification. And I think that's the Humira coming off patent. That's the other reason, honestly, that AbbVie is trading at those discounted PEs. Now, I just say, hey, what does it cost to carry debt these days, interest only? I'm just assuming, hey, maybe about 4%. I think this is realistic. It just goes to show that Pfizer's debt stack on their long-term debt is going to cost them about $1.485 billion per year, whereas AbbVie's debt stack is more than double. We're looking at about $3.282 billion a year. And so that's meaningful. The problem with all this debt is it really does take away from the company's ability to increase dividends. It takes away from the company's ability to stockpile cash reserves. It takes away from the company's ability potentially to use cash to make acquisitions. And so something to keep in mind that AbbVie has a lot of debt. Now, the good thing with all of this right now is debt is cheap. And I think personally debt's going to be cheap for a really long time. Now, I want to get into really quickly a cash flow summary. I did a little cash flow analysis on both of these. And then I'm going to get into some more interesting stuff, the slides. So check it out on the screen right now, though. Let's do the cash flow analysis. On a cash, this is not a extensive cash flow analysis, but what I'm trying to do here is give you a flavor of how I look at things, a flavor of how I can take a really complex statement of cash flows. I can kind of water it down and make sense of it, because sometimes I imagine a lot of you at home are looking through these financial statements and you're wondering, there's just too much here, and it's almost turns the investor away from even looking at it. Here's how I simplify things. I just look, what's the operating cash flow at Pfizer? $14.4 billion. AbbVie comparable is $17.5. Interesting. It's when I started looking at things in these terms that it started illuminating to me, wow, Ian, you're doing a video about Pfizer, but is that the dirt cheap one, or is AbbVie even more dirt cheap? CapEx. Both companies have capital expenditures, property, plant, equipment, so on and so forth. And so to get a free cash flow, it's really important to subtract out CapEx, because CapEx is not counted in net earnings. CapEx is something you only see on the statement of cash flows. But most businesses, there's some level of capital expenditures. There's some CapEx that's going to happen ongoing each year. And so CapEx for me as an investor is really important to factor in. So I subtract it out. Let's keep going. Check it out on the screen right now. Next, what I looked at is just debt carry. I take that debt carry I just showed you guys above. I put it in here. This isn't the actual debt carry, but I'm just saying, hey, if they refinance all their debt interest only at a 4%, what's it going to cost to carry that debt? Assuming they don't add more debt, the long-term debt. Well, Pfizer, I subtract out $1.485 billion. AbbVie, I subtract out $3.282 billion. Then I look at dividends. These companies are paying a lot of dividends on the statement of cash flows. It shows you right there how much is it costing the company to pay these dividends. Well, it's costing Pfizer $8.4 billion a year to pay out dividends. AbbVie, $7.7 billion a year. And so what's left? What I do then is I sum up all these cells. Obviously, the positive one is the operating cash flow. The rest are negative. What do I get? What's left at the end of the day in terms of just cash? Well, Pfizer has about $2.2 billion left over. AbbVie has about $4.4 billion. Now, AbbVie might be a little wacky. The numbers might not be perfect. And I don't even include Viatris in here because Viatris is a brand new entity. We don't even know. We don't have enough data on it to fully understand it yet. So I can't do this kind of analysis on Viatris yet. But I can do it here. But again, AbbVie, the Allergan merger happened mid-2020. And I'm looking, by the way, I'm looking at 2020 numbers here. I'm just looking at 2020 statement of cash flows. And so what you're seeing here are some very interesting numbers. And when I look at the what's left, when I see that AbbVie is almost double, or actually is double of Pfizer, I'm like, wait a minute, Ian, you were getting into this thinking that Pfizer's the dirt cheap one. And it just continues to surprise me because I was buying AbbVie in the 60s and 70s. Now it's at $107. But honestly, my goodness, this thing is still a value. And so I wouldn't say that Pfizer is not dirt cheap. I think they're both dirt cheap. I think the fact of the matter, though, is Pfizer has a better risk profile. Pfizer is a more conservatively structured company, whereas AbbVie, it's a higher risk company. They're both cheap. Viatris, it's next level dirt cheap, as I discussed in my last video. But Viatris has its own set of risks. One of the biggest ones being I just can't get my head wrapped around the whole thing perfectly until more financial reports come out. So what I want to do now is I looked at the Q4 numbers. I looked at the recent earnings reports. I assembled some slides that I received from Pfizer that I want to go through that I think are really helpful for anyone considering an investment or already investing in Pfizer or in big pharma for that matter. So let's get started with that. So check it out on the screen right now. And so the first thing I want to go through is I thought this was fascinating that Pfizer is having a lot of success with clinical trials. And so you can see Pfizer. By the way, before I even get into this too much, this is a tough industry. I think pharmaceutical companies will always be priced with lower PEs. So it's like, oh, you can't just say because all these PEs are low, they're dirt cheap. I just know that in the realm of historical trading ranges and in the realm of comparing these versus where other PEs are in the market, it is dirt cheap. But I'm just saying Pfizer, AbbVie, Pharma will always have a discount. And one of the reasons for that is these companies only thrive as they develop new drugs, new treatments, new solutions. And the patents that they receive only last 20 years. And so they always have to innovate. And when the patent expires, others can create generics, they can compete, it's tricky. It's a tough business. And so the other thing worth noting is Pfizer, why did they spin off Upjohn into Viatris? They did that to streamline and focus on the real innovative, the new drug therapies. Why did Pfizer, I think in 2019, spin off their consumer business with GlaxoSmithKline, and they're still an investor in it, but they don't have to focus day to day on the consumer stuff. They get cash flows from it, but they don't focus on it day to day. Why is that? Well, the reason for that is they want to stay focused on the hardest part of the business, the innovative part of the business, developing new therapies. And so as you keep that in mind, when you look at the slide on the screen right now, what you see is these folks have a really strong track record of clinical trials. You can see they compare themselves to the industry, and they're looking at basically success rates. What are their success rates? They are higher than the industry. And so Pfizer is consistently, it looks higher than the industry, and it seems like it's skewing better in more recent years because they have Pfizer through 2015, they have Pfizer through 2020, and then they have the industry through 2019. And you can see going all the way to the end-to-end success rate, 5% through 2015 versus 8% for the industry through 2019. But as you go to Pfizer through 2020, their end-to-end success rate is 21%. Getting from phase 1 to phase 2, phase 3, and getting approval, end-to-end success rate is better than the industry. And so they're saying their end-to-end clinical success rate through 2020, it's more than 2.5 times the 2019 industry benchmark. And I cannot tell you how important this is. If they can keep this up, this will set Pfizer above and beyond other big pharma. This will take Pfizer to the next level, because all it takes, quite frankly, is for Pfizer to come up with one, using AbbVie as the example, one Humira-style blockbuster drug, and this whole thing is going to hockey stick. And so with that, I want to share some more information on Pfizer. Check it out on the screen right now. And so what I want to show next is Pfizer has reaffirmed projected revenue compound annual growth rate of at least 6% through 2025, and that excludes the BNT162b2. BNT162b2, that is their vaccine. That is their vaccine for the pandemic. And so basically what I like about this is they have a strong pipeline, and we know from the last slide that they have a lot of success with their clinical trials. And what they're saying is a company this big, $200 billion company, through 2025, they expect revenue on average per year to grow by at least 6%. That is really promising to see as an investor. I like to see that because as they can grow revenue, hopefully the rest of it, the earnings, everything else, cash flows follows. And that means more dividends for investors like myself. Let's keep going. Check it out on the screen right now. And so the next one I want to do is I want to just share a few quarterly income statement highlights. This is from Q4, and it just gives some of the highlights. I thought it was fabulous to see revenues are up to 11%. Obviously, a lot of that is going to be fueled by BNT162b2 or the vaccine. What else did I like here? I liked seeing that the adjusted diluted EPS was up 14%, and so I thought that was really fabulous as well. The numbers are trending in the right direction. More slides to share. Let's keep going. Check it out on the screen right now. And so the next one that I wanted to go through is just guidance. In 2021, the company is guiding that revenues are going to be between 59.4 and 61.4 billion. It looks like they're dropping all the way to the bottom. The adjusted diluted EPS is going to be between 310 and 320. Now, what's interesting about that is actually in the spreadsheet I shared earlier in the video, I'm using for 2021 the analyst estimate of 333. And so what that means, quite frankly, is that the analysts are expecting a much better year even than the companies themselves, because the analyst consensus estimates are at 333, but the company is guiding to 320. And so I thought that was really nice. But basically, it says in the highlighted area at the bottom, the midpoint of the revenue range reflects 41% operating growth compared to 2020 revenues. The midpoint of the adjusted diluted EPS range reflects 38% operating growth. Now, we absolutely have to keep in mind that 2021 is going to be a one-time special year because of the vaccine. It's not going to be like this every year into the future. That being said, it is a good moment in time for Pfizer, hopefully to garner some profits from everything they've been doing, all the good work they've been doing, and they can reinvest that into even more R&D, which will hopefully balloon the company to bigger proportions in years to come. And so I really like what I'm seeing here. Let's keep going. Check it out on the screen right now. So I want to share the next slide, which is basically the vaccine impact. I thought this is really fascinating because basically what this tells me is the vaccine at 15 billion, when I know their total revenue is about 60 billion, it means that the vaccine is basically representing about 25% of revenues in 2021. And so that is just staggering year for this thing. And it shows the adjusted income margin on it, high 20s as a percentage of revenues for the vaccine. And so just something, again, that makes the analysis of this particular company a little bit tricky is that vaccine and how it's going to lump a lot of revenue into 2021. More slides to share. Let's keep going. Check it out on the screen right now. And so what you see here is they do give guidance in 2021, excluding the vaccine. And that's where I'm seeing 250 to 260. And so I just took the midpoint at 255, and let's say there was no vaccine. If there was no vaccine, as I shared in my original Excel at the beginning of the video, it puts the PE at a 14. And to keep in mind, the PE at AbbVie, the comparable, is an 8. So yeah, you know, this company is trading at quite a premium valuation to AbbVie. Is it still dirt cheap? I think it is. And I look at it with the vaccine because the vaccine is real. And so that's part of it. But that being said, I think it is nice, at least, that the company is providing some guidance. The company is giving that clear picture of what it would look like without the vaccine. But personally speaking, I'm looking at it with the vaccine. And yes, I think 2022 will taper off in earnings. But that being said, there's so much innovation going on with the pipeline at this company that I think things could continue to pick up and the PE could stay down in this range, say, of 10 to 12, somewhere in that nice range, which I really love. Check it out on the screen right now. Next one. And so what I want to share next is the fact of the matter that they really care about dividends. And so I don't need to go through all of these key takeaways, but there's a lot of information here about where Pfizer's going, what they see happening. What I like the most is the last check mark that says, hey, we paid $8.4 billion in cash dividends to shareholders in 2020. In this day and age, and this is something really important, on the podcast I was just on, Dividend Talk, with my friends, European dividend investor and Engineer My Freedom, one of the things we talked about is a stock I own, Danone. Danone recently cut the dividend, and kind of when you look into it, they didn't really have to cut the dividend. I almost feel like they cut it. Maybe they were giving into social pressure or who knows what, but they just cut it. These days, our world is changing. It's changing globally, and it's changing in the United States. And I think it's important for investors who invest for dividends to keep an eye out. How safe are my dividends? Could the dividends get cut? Because I'm saying sometimes a company has to cut a dividend. They have a short-term need or even a long-term need. Business isn't doing so well. Fine, I understand that. And then hopefully they bring it back later. Fine, I understand that. And I don't even sell in that case. But sometimes a company will cut the dividend just because society's kind of telling you, hey, cut the dividend. These dividend investors, they have too much money. These dividend investors, they're just these rich people. Well, the problem is I think there's a misconception that all dividend investors are just wildly rich people. This couldn't be further from the truth. Dividend investing is a hack. It is a cheat code, if you will, in the video game of life for anyone, for the average person, for the everyday person. But unfortunately, I think the media, I think a lot of people that are naysayers, I think a lot of people that like to point the finger, they don't understand that when they say things like, take away the dividends or tax the dividends. They don't understand that it's affecting normal people like you and me. And so part of my charter on this channel is just to spread that word. I think that's really important. But anyways, to make a long story short, I like to invest in companies like Pfizer because Pfizer says in their literature, we're paying all these dividends, we care about the dividends. And I think a company like Pfizer is a lot less likely to cut a dividend than someone like Danone, for example, who did cut the dividend because just they kind of felt like it. There's no really good reason. Whereas Pfizer, they stand behind the dividend, they care about the dividend. And so I think that's a really, really important thing. When I'm looking through literature from companies, I like to see something like this. It really means a lot to me, especially in the political and the kind of socially controversial world we live in these days. And so let's keep going. Check it out on the screen right now. And so the next one that I want to go through is just some results. I think this is their Q4 in 2020 results, and I think what's helpful here is it gives a comparable year over year what's happening at Pfizer. And what I would say for the fourth quarter is when I look all the way at the bottom, revenue is up 11%. Operationally, I guess total it says 12%. I don't know how they're differentiating those two. Probably the 11% is the right one to look at. And then full year revenue is only up 3% operationally. Now, keep in mind that 2020 was a weird year. A lot of people were delaying going to the hospital, delaying seeing their doctor if they could. So the revenue growth for the full year, it's under that 6% rate that I just shared on another slide. But I think 2020 is a little bit of an outlier, and we see in Q4 how things are starting to grow already. Let's keep going. Check it out on the screen right now. And so next, what I want to do is get into just stock performance. How have these stocks done over time? You can see Pfizer is the darker blue line on the bottom. AbbVie is the lighter blue line on the top. Obviously, AbbVie has been a little bit more volatile to the upside. It's just had wider swings, I would say, than Pfizer. But overall, it's also done a lot better. Over the last 5 years, it's up 80%, whereas Pfizer is only up 14%. One of the things I would say, Pharma is cheap now. Big Pharma is cheap. There are stocks like Johnson & Johnson that kind of are outliers. They're just so world-class that despite this relatively difficult industry to be in, they have a secret sauce. They have a secret sauce business model where they span consumer, medical devices, and pharma, and they're at such a big scale that they just keep growing up and to the right. Well, for a lot of companies in this space that are more pure pharma driven, like Pfizer and AbbVie, it hasn't been a good last 5 years. It's been okay, I guess AbbVie in particular, but for Pfizer, stock hasn't really gone anywhere. And so when I look at something like this, I have a few takeaways. One takeaway is this is a tough business. I don't want to fool myself. I don't want to present a one-sided analysis. Pharma is a tough business because the drugs are on patent for 20 years and they have to keep churning. They have to keep innovating. It's a tough business. Because it's a tough business, that's why PE ratios are historically lower than other industries in the market. Now, certain companies like a J&J will always trade at a more premium PE because it's more of a blended business. It's not pure pharma. And it's just at such a high pedigree, such a high world-class operation. But this is something for anyone to realize. Pfizer hasn't gone anywhere in the last 5 years. It's underperformed the market. It's underperformed the S&P. Why would I invest in something like this? Well, why I would invest in it, personally speaking, is past performance does not mean everything to me. I invest for dividends and cash flow. I like to have broad representation of different industry groups in my portfolio. I like it, honestly, when there's a company that's underperformed for a while because sometimes that signals a buying opportunity. Sometimes that signals that there's value, and I'm seeing value right now in AbbVie and Pfizer. But the fact of the matter is, if the next 5 years are like the last 5 years, well, for a total returns investor, this type of thing might not make the most sense. But for someone like myself who can wait it out, who's with it over the long term, who can stand the test of time, I honestly, I don't care where the stock price goes as long as they can keep paying and growing the dividend, because I'm investing for the cash flow. And these cash flows on Pfizer and AbbVie, they're juicy enough where I can actually pay bills with the cash flow. Like, these are good cash flow, good starting yield. Sometimes I get the question here, Ian, I'm starting a bit older, I'm closer to retirement. What types of stocks might make sense in that type of situation? These types of stocks might make sense in that type of situation. In my humble opinion, just speaking to my personal experience, I don't provide investment advice. I'm just sharing this for fun and entertainment. Just saying hypothetically, if I were just starting now, and I were going to retire in a year or two, these are the types of stocks I would look at because they're growing the dividends, but they also provide a juicy starting yield. And yeah, the capital appreciation, it will probably continue to be a bit lower. But that being said, I think the PEs here are kind of been compressed a bit as compared to everything else, where there could be some upside capital appreciation as well. But certainly, it's important to be honest on this topic that, yeah, total returns, Pfizer is not where it's all been at over the last 5 years. That's for sure. Let's keep going. Check it out on the screen right now. And so the next thing that I want to go through is just this consumer business. Pfizer announces the closing of a joint venture with GlaxoSmithKline to create a premier global consumer healthcare company. Basically, what happened a few years ago in 2019 is Pfizer ended up giving its consumer business, or kind of combining it with Glaxo's consumer business, and Pfizer got a 32% equity stake in the joint venture. And so this is, as I was speaking to earlier, that it allowed Pfizer to focus on their pharma business. Now, for better or worse, I don't know. I love consumer businesses. I don't fully understand Pfizer's move. Quite frankly, I like a company more like a J&J that has the consumer business, has the pharma, has the devices. But the fact of the matter is not everyone can be J&J, and I feel like Pfizer probably rationalized that Glaxo can just run it better in the joint venture, and they can focus just tunnel vision on their pharma business. So anyway, that's what they did. But they still own that joint venture, 32% of it, and they benefit from that, which is really awesome. So I like that. Let's keep going. Check it out on the screen right now. And so the next slide that I want to share is their balance sheet. So I don't need to go through all these numbers because I already summarized it for you earlier. But what I would say about Pfizer, and I don't show AbbVie, but what I really like about Pfizer is their balance sheet is solid. And in particular, the one item that I like the most is that long-term debt at $37 billion. And in fact, 2020 versus 2019, long-term debt went up, but just a little bit, 35.9 to 37.1. So certainly, the other thing worth noting is total liabilities went down year over year. Their liabilities went from 104 down to 90. And I believe that some of this, what we're seeing with the balance sheet, could be related to Viatris, because we also see their assets going down as well from 167 to 154. But nonetheless, there's a lot going on here. But when I look at something like this, trying to take the complex and just hone in on what's so important, when I look at the long-term debt, it is so substantially lower than their competitor. Then again, when I stack all the numbers on their competitor, AbbVie is just pulling in an enormous amount of cash at the end of the day. It's just phenomenal. So let's keep going. Check it out on the screen right now. The last screenshot that I want to go through today is just the Pfizer cash flows. And what did I want to show here? You can just see where I pulled some of these numbers for my analysis that I shared at the beginning of the video, and you can see their net cash provided by operating activities. It kind of bounces around a bit from 15.8 to 12.5, 14.3. I think what's important to notice here is you can see CapEx, purchases of property, plant, and equipment. That's under investing activities. That's where I pulled. That's what's basically CapEx, $2.2 billion. And you can see each year they have such expenses, and that isn't incorporated into net income or earnings per share, but it is a real expense. It happens every year. And you can also see here a very big line item for dividends. And basically those dividends, $8.4 billion. What else is interesting is there are purchases of common stock, and they were purchasing back stock in 2018 and 2019, but they did not do that in 2020. And so that's interesting to see as well. It's kind of a messy cash flows here, quite frankly, but some of this is bouncing around, and it's a little different than it would otherwise be because these guys spun off of Viatris. And so I think that's messing with things as well. But I just want to show you really quickly how I take something complex and I try to pick out the numbers that really are most relevant to me. Then I just put those numbers in Excel and I try to look at it in a more simplistic way to get a better picture of what's going on here. And so with that, I want to summarize everything really quickly. Check it out on the screen right now. And so what I want to show you is just, what do I like about Pfizer now? I like that the PE is a 10.99. I like that even without the vaccine, it's at a 14.35. I like that the dividend is increasing at Pfizer even after the Viatris spinoff. They didn't have to keep increasing it. They could have blamed it. Hey, we don't have Viatris. You're getting the dividend over there. We don't have to pay so much. But no, they stayed loyal to the shareholders on the dividend. And forthcoming, we're going to be getting 3.3% on those Viatris shares. And so that's exciting. And I just show the dividend here. It keeps going up from 38 to 39. It's up even with that Viatris spinoff. I love that. It's a dividend-friendly company. They care about the shareholders. I have to underscore this. It's not like Danone. Although I love Danone, and I hope they bring the dividend back. But I would say Pfizer, I can't see them just aimlessly cutting the dividend without having a really valid reason. The vaccine, it's 25% of revenues. And I don't honestly think that's even priced into the stock. I think they're trading the stock right now as if there were no vaccine. And I think the vaccine matters. It's adding value, it's adding earnings, and those earnings are going to be plowed back into R&D. And the R&D is going to yield results. We know that their pipeline is good, and we know that they're getting an end-to-end yield on that pipeline better than the industry. I like that even without the vaccine, they're saying that they're going to grow revenue through 2025 by at least 6% per year. They have a great balance sheet, only $37 billion in debt. But it's still, for the scale of this company, that's not bad. It's a relatively safe option in the pharma space. It's very diversified, I would say. AbbVie's got a real skew towards Humira. This is trading a little more premium, but it's still dirt cheap, and it has a little more safety in it. It's a safer option probably for someone a little more risk averse. I like owning both just to hedge my bets to diversify. I think it's kind of funny that I was looking at this and I was just going to talk about Pfizer today, but AbbVie looks even more dirt cheap, and of course Viatris too. And that's what's so fun about these analyses. I go through them and I pull out something I didn't even expect to. And so on Monday, what am I going to do? I'm going to buy Pfizer or AbbVie. Honestly, I might just go for AbbVie, although it's been a while since I bought Pfizer. So I want to buy Pfizer and I want to buy more Viatris. I might buy all three. By the way, there's another YouTuber called Darth Dividend. I'll link to him in the pinned comment below. He recently did a really cool YouTube analysis on Pfizer as well, and he sees a lot of value on Pfizer, and he's a nurse. And so I like having a nurse's perspective because day to day, Darth Dividend has experience with using Pfizer products, understanding Pfizer products, and he has had a positive experience with that as well. So check out my homie there. I'll link to him in the pinned comment below for another perspective on Pfizer as well. All right, everyone, if you enjoyed the video today, I kindly ask you to go ahead and smash that like button. It really means the world to me. It helps me out so much. It helps this knowledge get to more people on YouTube. And don't forget to hit the subscribe button with the notification bell as well, so you're instantly informed when my next video is live. And I work so hard on these videos, so I really appreciate that. But also, just a friendly reminder, head on over to Patreon. 150 and growing. 26 bonus videos instantly unlocked, and it helps me out because everyone on Patreon feels what I do here on YouTube and beyond. And when you're on Patreon, you can message me as well, and I have a lot of people there messaging me, and I do my best to prioritize those and respond to those inquiries that come through there on Patreon. So I love you all. Check it out. I will link to it in the pinned comment below. I got some Fly dividend investing merch as well, which I'll link to in the pinned comment below. Before I leave today, also don't forget the podcast, Dividend Talk. You got to check it out. It was a lot of fun, a lot of fun. And so before I leave today, in terms of a full disclosure, I own the stocks mentioned today. I am long Pfizer, ticker symbol PFE, Viatris, ticker symbol VTRS, AbbVie, ticker symbol ABBV, Johnson & Johnson, ticker symbol JNJ, and Danone, ticker symbol DANOY. Also, before I leave today, in terms of a full disclosure, or actually a friendly disclaimer, boy, it's getting late here on Friday night. I still have to edit this thing. I'm going to get it live tonight, even if I have to have coffee to make it through. I'm doing this for the community. Please smash that like button. I am going to just stay up late, even if my health suffers. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment, and losing money in the market is very possible. Our market has gone to really high extents, and it could crash at any time, so please consult your advisor before doing anything. Just sharing my journey. Okay, everyone. That's it for today. I love you all, and I hope you have a wonderful weekend. I hope you enjoy the video. I'll see you in the comments section below, and I'll see you in the next video.